Hey guys, so in this lesson we're covering something very interesting. It's something extremely important, and it's multi-timeframe analysis. At this point, you're stepping into the next phase, right? We just covered all the beginner type of lessons, which was the foundation of this trading masterclass that I created. In this next section, you're literally stepping into the advanced zone, okay? This is your graduation into the advanced zone, the beginner stuff is done. So I hope you understand it, I hope you know it. But multi-timeframe analysis, this is literally my holy grail, okay? This is what I have mastered over the last 6 years, since 2012. And with that said, from now on, you will be using everything that we have learned, plus multi-timeframe analysis. We will even be, in the coming up lessons, we will be even going back into some of the concepts that we already talked about, but looking at it in a different way using multi-timeframe analysis. Okay, so literally multi-timeframe analysis will be in every single lesson from now on. So it's going to be very important for you guys to understand it. But if you don't understand it just yet after listening to this lesson, don't worry, because like I said, it will be in every single lesson coming up, okay? So this is just going to be an introduction to multi-timeframe analysis. I'll spend some time on it explaining exactly what it is, right? But coming up in the next lessons after this, we'll be digging into even more advanced concepts under multi-timeframe analysis. So with that said, guys, let's get started with this. Let's have a look at the charts. All right, so in this lesson, we're going to be looking at the chart of pound dollar. We're already familiar with this one. We've looked at it in a few lessons previous to this. But what's interesting about this lesson, or what's exciting about this lesson, is that right now multi-timeframe analysis begins, which is really the one concept that I have mastered in my trading. And from now on, this is going to be an introduction to multi-timeframe analysis, but from now on, every single lesson will be including multi-timeframe analysis. So at this point, this is where we are separating from the beginner level, which were the introductory lessons that we just went through, to the advanced level, which is using everything you've learned so far and adding multi-timeframe analysis and the strategies and all of that on top of it all. So with that said, let me explain what is multi-timeframe analysis. So there's one concept, one statement that I picked up from my initial mentors back in 2012, Infinite Prosperity, and that is that a run is a trend and a trend is a run. So let me say that again: a run is a trend and a trend is a run. Since then, I took that concept and literally merged it into everything that I do. So let me explain that. Let's have a look at the monthly chart here. And this is multi-timeframe analysis. The way I do multi-timeframe analysis, you will see me from now on, literally in every lesson, I will be looking at the monthly, I will be looking at the weekly, I will be looking at the daily and the intradays, such as the 4 hour, the 1 hour, and then lastly the 5 minute. The 5 minute is, I don't really use it for multi-timeframe analysis. Like I said earlier, it's just for timing purposes, for timing my entries, and you will see that in the strategy lessons. But from the monthly down to the 1 hour, I use all those time frames, and that is multi-timeframe analysis. And I'll show you as we go on how all of that fits together. But for now, let's just focus on the higher time frames here: monthly, weekly, daily. Multi-timeframe analysis is a combination, to me at least, it's a combination of 3 time frames minimum, okay? 2 time frames is good, but it doesn't give you a whole picture. 3 time frames gives you like pretty much a whole picture. So that's what we're focusing on here. As a swing trader, you'll be focusing on this all the time: monthly, weekly, daily. As a day trader, you'll probably be focusing more on daily, 4 hour, 1 hour kind of thing. If you want to be a hybrid style, which I will explain all of those styles, with a hybrid style, it's literally you're going to be looking at them all, monthly down to the 1 hour, to catch those big opportunities. You have to do that. So with that said, monthly chart here on pound dollar, we're going to start off and talk about that concept. A run is a trend and a trend is a run. So let's go through our analysis here again. We have that horizontal support and resistance level. And guys, you're going to see many more chart analysis from me, so I'm just talking about this one chart just because we're familiar with it, so I want to build on the knowledge that we already have with this chart. So we got that horizontal support and resistance. We didn't have any trend lines or anything like that, if you remember. Nothing really connected, right? So it doesn't work. Even the top of the wicks, that doesn't work either. But what we do have is that 50 EMA is acting as resistance. This beautiful horizontal support and resistance line also acting as resistance. If you guys remember, we have the Fibonacci retracement also acting as resistance. Here we go. So then what we had was deceleration. You know, we looked at this during the deceleration consolidation lesson, and we have the candlesticks themselves, they are decelerating. Okay, not price action, the candlestick formation. Okay, we have deceleration here. We have that bearish inside bar, and then that beautiful bearish high test reversal or shooting star, right? So it's a perfect rejection of this area. So now the idea is that we believe that a new run is going to be beginning, like in this case, right? A new run is beginning. So I'm going to kind of jump back in time to this moment here. I'll do the same thing on the weekly, right? So that's the monthly. Let's just leave that at that point for now. So the weekly, I'm going to jump to that same moment as where the monthly closed. And then we'll piece it all together. And then the daily. Right here. Okay, so now we have all three time frames lined up at the exact same time where that monthly candlestick closed. Okay, so from now on, this is where it really gets interesting. So multi-time frame analysis, a run is a trend and a trend is a run. Okay, so run on a monthly time frame. Okay, we are beginning a potential run on a monthly time frame to the downside based on the rejection of the 50 EMA, the horizontal line, and 0.32 Fibonacci, plus the bearish high test reversal. Okay, so based on that analysis, we believe that a run to the downside will begin. So we need confirmation. Multi-time frame analysis is all about confirmation. Okay, so remember that point. It is all about confirmation. So if you believe a run is beginning on a monthly or a higher time frame, then on a lower time frame, such as the weekly, you should have a little bit more. You should have bearish price action. Okay, because we are believing that a bearish run is beginning. So we should have some kind of price action, some kind of price action pattern that's developing, a trend change. Okay, signs of a trend change. So in this case, what do we have? You know, so let's zoom in on this weekly chart and let's see, do we have, my chart just refreshed, so let me jump back. There we go. So do we have multi-time frame confirmation? Okay, do we have price action confirmation? You know, so what's happening here? And the first thing, well, the main thing here that really stands out is the double top area. Okay, we don't have, their monthly resistance is in this region. You know, that's kind of where that monthly resistance is. It's in this area. Remember, we always say that it's more of an area. That's kind of where it is. But what we have here is price action is decelerating. So not just the candlestick formation. Okay, now the price action is decelerating, forming what? A double top. Right? Now I mentioned that a double top is not the strongest pattern. It's not my favorite pattern because what? It can still form a higher low and continue higher. But double top with multi-time frame confirmation is good. So where's our multi-time frame confirmation? Well, we have a double top. Well, on the monthly time frame, we have a rejection. Okay, candlesticks are rejecting the 50 EMA, 0.32 and that horizontal level. So does a double top confirm that rejection? Yes, it does. You know, even though a double top might not be my favorite price action pattern, but when you're looking at this monthly and the weekly together, then it's perfect because the monthly is decelerating and giving us a rejection, and that weekly is confirming that rejection with a double top pattern and a bearish engulfing accelerating to the downside. Okay, so the weekly is giving us a little bit more confirmation. Right, so that's what we're looking for. When we're doing multi-time frame analysis, we're pretty much stacking confirmation together from one time frame to another. Okay, so monthly, the run is beginning, rejection is happening. Then on the weekly, we have a double top, which is the sign that this level on the monthly time frame is actually being rejected. You know, my charts are refreshing, so I'm just going to keep it like this. But yeah, so on the monthly chart, we have that rejection. On the weekly time frame, we have that confirmation with that double top that that level is actually being rejected on the monthly time frame. So on the daily chart, because guess what? There's more candlesticks, there's more days within a month than there's weeks within a month, right? Think about that for a second. There are more days within a month than there are weeks within a month. So therefore, there will be more price action development on the daily than there will be on the weekly, than there will be on a monthly, right? So monthly will just have a rejection typically, or the first time frame. The first time frame will typically just have a rejection, like this candlestick formation, okay? The second time frame, which in this case is the weekly chart, will have a little bit more price action, like this double top and this bearish engulfing, okay? The next time frame, the third time frame, will have the most price action because guess what? You know, here we have just one monthly candle, but within that one monthly candle, we have 30 daily candles, right? Within that one monthly candle, we have 4 weekly candles. So you see the difference? Obviously, there's not 30 because this market is not open 24/7, but there'll be 20 at least, you know, so 20 daily candles or so, Monday to Friday. So much more price action on a daily than on a monthly than on a weekly. So now, does the daily give us confirmation of the monthly rejection? So what do we have here on the daily time frame that could suggest confirmation of that rejection? You know, so we saw that the monthly closed right here. Okay, so that's where the monthly chart closed. So let's do some analysis. We know that there's resistance in this area. We saw it on a monthly, we saw it on a weekly, right? That's that monthly level. Let's just show you. Right, you see it lines up. My cursor lines up pretty much on the monthly and on the daily. It's always going to be just a little bit off, but it's resistance area, always remember that. So we have resistance in this area. What else do we have? Well, we have bearish MACD divergence. Okay, we learned about this too. So price action is neutral. It's not really getting any higher, but it's not giving us lower highs. But MACD is giving us lower highs. So we have divergence in price action. What else do we have? Well, we have this triangle pattern that's developing here. But guess what? The triangle pattern was broken to the downside. Okay, so we have an ascending triangle. We looked at ascending triangles just recently, right? But that ascending triangle was broken to the downside. So is this full confirmation? You guys answer that on your own right now. Is that giving us full confirmation? Let me jump back again. There we go. So that is the concept of multi-time frame analysis. To me, this is full confirmation now, because the monthly, all we have is just one small little piece, as you guys can see. It's just one small little piece. So that's why, like, when traders just look at the daily time frame and they just trade the daily time frame, they're not seeing the entire picture, literally, you know. But by looking at multi-time frame analysis, you get the entire picture. It's kind of like that iceberg reference, you know, that I'm just going to speak as my charts are loading. But as you know, when you see an iceberg, you only see a small little piece above the water, above the ocean, you know, but the majority of the iceberg is below, okay, below the surface. So this is kind of the same thing. When you're looking at just a one time frame, you're seeing just one small little piece. Majority of it is below the surface, okay? So if you're looking at a monthly chart or a weekly chart or a daily chart only, then you're just looking at one piece. Majority of that is under the surface, within the monthly candle, within the weekly candle, within the daily candle, okay? Within one day, guess what? There's 24 hours, okay? So if you're looking just at a daily candlestick, within that daily candlestick, there's 24 hours of price action on a 1 hour chart, right? If you're looking at a weekly chart, there's 5 daily candles within a weekly time frame. Within a weekly candlestick, there's 5 daily candles. Okay, so going lower gives you more price action, therefore it can give you more confirmation, therefore you can be very accurate with your entry points and with your analysis. Okay, so that's it for now. I'm just going to leave this lesson right there at that point, because that is the basis of multi-timeframe analysis. And from now on, we're going to be looking at all of the lessons now. We're literally going to be multi-timeframe analysis. We're going to be looking at different trade examples. We're going to be looking at the strategies, which the strategies are built on multi-timeframe analysis. We're going to be looking at candlesticks and how candlesticks can be confirmed with multi-timeframe analysis, and even how consolidation can be confirmed with multi-timeframe analysis. So every single lesson from now on is going to be using this concept of multi-timeframe analysis. So let's summarize just for a second before we finish off. A run is a trend and a trend is a run. So a run on a higher time frame will be a trend on a lower time frame. Remember that point, okay? So if you believe that a run is happening, like in this monthly chart, we believe that a bearish run is beginning, then look for confirmation on the lower time frames. And this can be done on a weekly down, it can be done on a daily down, so sometimes we don't have anything on a monthly chart, nothing, zero, and that's okay, because maybe we have something beautiful on the weekly. So then we believe that a run on a weekly chart is beginning, then we confirm it with daily price action, we confirm it with 4-hour price action, 3 time frames, right? Maybe there's nothing on a monthly, nothing on a weekly, but the daily is beautiful, has a beautiful rejection, and we believe that a daily run is beginning, or a pullback. It can be used for pullbacks too, but it's mainly for the trending market, okay? So we believe that a daily run is beginning. Then we would use the 4-hour chart for confirmation and the 1-hour chart for confirmation, right? So you don't always have to use every single time frame. When every single time frame lines up, it's a beautiful setups, and I will show you some of them in the coming up lessons, when literally every single time frame lines up, and those trades can, if you push them, they can go for a lot of percentage, 10% and up, majority of them, because guess what? You're targeting that monthly run. So if you get in with a day trade, that's a big move, and that's what I'm really excited about, because if you don't know multi-timeframe analysis, in my opinion, it's just much harder to catch those beautiful opportunities. Then with multi-timeframe analysis, you're also ready, because something that I didn't talk about, which actually I'll talk about it now, you're ready, because when this monthly chart is starting to develop, okay, when you believe that this rejection is happening, like I was watching this setup, I was waiting for this trade for months. I knew that was going to happen for months. Why? When? Well, first of all, when this pullback was happening. Okay, so that's when I was already looking for, okay, I want to see what happens when price action rejects this area. Okay, so already when this pullback was happening, I already knew, okay, when price action starts rejecting this area, I want to start looking for potential short play, because wow, that's a lot of resistance. Okay, then when we finally hit it, at this point I was waiting for confirmation. Okay, so the first candle, it didn't give us much. We didn't have much weekly confirmation for a monthly move to the downside. Short-term plays, yes, short-term plays are okay, and we will talk about them later. But for that monthly move, we didn't have confirmation yet. Okay, then we had another candlestick. We had that bearish candle, that bearish inside bar on the monthly chart. And that gave us a little bit more, but you can see at that point, the weekly was just in this little pullback. It didn't have price action. The weekly was just in a pullback. And what was the daily chart doing during that time? What is this? Do you guys know it? We looked at it. Say it to yourself right now. Right? So this is pretty much when we had that bearish inside bar on the monthly chart. Okay? Well, the weekly was just a pullback, and the daily chart was a falling wedge. Bullish reversal pattern. So we didn't have higher time frame confirmation at that point. So I'm just waiting. Short-term plays are okay. You can take a quick short-term play based on the daily run, but not a monthly run yet, right? Because we don't have higher time frame or lower time frame confirmation. Until pretty much we started to hit the double tops again on a weekly chart, And at this point, we started to develop lower time frame confirmation. At this point, the weekly finally made a double top. the daily chart finally started to break down. And that is when the monthly run is beginning, because now the weekly confirmed it and the daily confirmed it. Whereas initially when I was starting to reject it, we didn't have that confirmation yet. We didn't have that bearish price action on the lower time frame. You know, all we had was just a weekly pullback was happening and a daily falling wedge was happening, which is a bullish price action pattern. So that is the beauty of multi-time frame analysis, because you not only are you ready months ahead of time and you're just waiting, you know, for this kind of setup. Like, that's why I love looking at higher time frames, because I'm just waiting. You know, I know when the big move is going to happen. I know that it will happen if we have confirmation, and I'm just waiting for that confirmation, you know, and not jumping into something that is not going to work, you know. So I'm waiting for confirmation, and that's the beauty of it, because it can help you find beautiful opportunities. It can confirm those beautiful opportunities. You will be ready for them months, weeks, days ahead of time, okay? And it will also help you find traps in the market, okay? Such as rejections that are not confirmed. Like this initial rejection with the inside bar was not confirmed. So if people chose to trade that short, well, they could have potentially had a loss because there was no confirmation. The lower time frames were still bullish, right? So it helps you find good opportunities. You will be ready for those good opportunities, and it will help you find traps in the market. So rejections that are not ready yet. So with that, it also builds your patience. And patience is extremely important when it comes to trading. So that concludes my first lesson on multi-time frame analysis. Hope you guys enjoyed it, and I will see you in the next one.